panel is all going to be about next-gen transaction banking and payments. So it'll be a lot more driven around the corporate, and we will hear the view from business and from technologists, both on the bank side and from technology partners. So let me introduce the panel. To start with, I'd like to introduce Mr. Bassam. Bassam is the head of transaction banking at Boubyan Bank. Bassam also is a very good, I won't say old friend, good friend who's very young. He cycles a lot and you can see his fitness, though he's of my age. Sometimes you need to keep yourself young, right? Or you really feel you're young. Next, I would like to invite Himanshu Tewari. Himanshu is the DGM IT for retail, wholesale, and digital at Gulf Bank. Next, I would like to invite Rami Al-Dhafiri. He is the AGM of digital transformation at Burgan Bank. While we have the bankers, no panelists complete without having a technology provider, and hence I would like to welcome the Senior Product Manager from TCS, Subrata Bhattacharya. Let's start here, and I'll start with Bassam. It's all about transaction banking, and I'd like to start with you, Bassam. And so Bassam, obviously we were talking about customers at the forefront. So what do you think are the expectations from your corporate SME customers when it comes to transaction banking, and especially when transaction banking is undergoing a lot of digital transformation? So what expectations they have, and how do you think those expectations are being fulfilled by banks?
First of all, thank you for having me. It's a pretty interesting time for transaction banking these days. Expectations are accelerating, to say the least. Change is rapid, so is the expectations. And what's happening now, I think, not just due to technological advancements, requirements from the businesses, the marketplace. I think somebody mentioned the psychographics, or what happens when Gen Z comes in and whatever it is. So because historically 20 years ago or 10 years ago, a lot of the older generation were still at the helm of the organization. Slow was being a bit picked up slowly and surely. But now that the younger generations are getting into those C-level jobs, it's fast moving now. The expectations are moving and at a very fast pace. The first basic change that they're requiring is that the CFO himself, per se, or the treasurer, or the corporate controller, or the CEO itself himself, they use the banks with their consumer apps, right? And they have expectations for things to happen immediately and rapidly. And they take the same expectations for their corporate business. Why do I have to wait for a payment for 2 days to arrive? I need immediate payment. So it's what we call the consumerization of expectations, right? So this is now becoming the norm. The norm is that I need things and I need it quickly. This is the norm, first of all. This has changed in a bit of the psychographics. Second is, what they're seeing is the real-time payment and real-time services, right? I want to issue a payment today. Why doesn't it get paid today? It has to be a real-time payment. We see India, I think, leading the charge with the real-time payments. And real-time payments sometimes take up to 10, 15 minutes, but sometimes they take less than a minute to reach. So we're looking into the needs for real-time payments in the local markets and obviously internationally. What's also is being needed or requested is the personalization of the services. I want to be able to log into my portal or to my service, and I'm be able to customize my dashboards. I want to see what's relevant for me. I want the services that are pertaining to my daily operations like I want it. Obviously, I'm looking for faster onboarding. It takes usually, it used to take days to onboard a client. We used to have a value proposition in sales. Oh, you sign today, you start tomorrow. And then they ask, if I sign today, why can't I start today? Why can't I self-onboard a service or a product or an experience? Experience is not relevant to corporate like in retail, but as a solution is more than the experience. Why, if I sign today, why can't I start today? Or a corporate client will come in, he's like, oh, Bassam, we just signed up for a big conference, and I need to have my e-commerce payment gateway up and running in 3 days. What can we do? So these are some of the challenges and expectations that we have. Additionally, the personalization and the customizations, we need to have a solution that is as standard as possible, but as customizable as possible. So it's very common these days that we get requirements from our client, oh, this is my digital signature, this is my bylaws, but I want specifically for that beneficiary a different bylaw, a different payment set, a different. And this is becoming the norm. I have another company who's like, this is how I process payroll, but if a payroll file has certain names in it, it has to go to a different routing. So this personalization and customization is becoming, again, the norm in TB. Additionally, a major ask is, it's not a major ask, it's ongoing in the market. So I think the first host-to-host integration or ERP integration, well, when I was involved was in 2004, we did this in EUB and HSBC. Now with those ERPs becoming mainstream and accessible to a lot of medium to lower size companies, this need for integration is becoming more and more crucial. And when we say need for integration, we're not talking months to go live. We really need to, sign today, start tomorrow kind of a thing. So integration to ERPs or API banking or ERP banking is again becoming the norm. We used to, part of the good TB franchise is building the human capital. We used to make sure that our cash managers are certified, our trade people are certified, right? So we used to say, I'm a cash management advisor or a certified cash manager. I could work in your treasury to help you with this. This is the advisory role. We're moving from just, having those verticals with those advisory roles to, providing a complete type of a solution across TB. So there's also a need from the bank to move a little bit from product-centric to an overall solution-centric. This has also been a key changer in the TB offering from our side. Additionally, of course, there's the additional, and I'm going to say additionally, there's compliance and cybersecurity issues that we need to address. They have become laundry list, but I could argue that all these items that were mentioned are becoming laundry list. So, and this is part of the mindset shift. So we want things, we want it now. I think this is a generational thing that's kicking in on consumer banking and now following suit onto corporate banking.
So that's very interesting, Bassam. So you're saying that corporates usually used to take it slow, but now they are like, they want instantly, and they don't want to wait, and they just are kind of following the trend that the consumer banking had undergone a few years back. Now, in that context, so we heard the business view. Now, let's look at a tech view. So, Himanshu, so obviously when the corporates are going to demand from the business in turn are going to demand from technology to ensure that you have the infrastructure in place to support these real-time scalable transactions, real-time transactions that happen seamlessly without any friction. So how do you think that these infrastructure elements that you are, from a technology perspective, play a key role, and how you would be in a position to support, especially support these, requirements that come from the business because of corporates to be fulfilled in days rather than forget weeks or months or years.
Yeah. Good morning, everyone. Thanks for having me here. So we recently went through a core transformation. So first I will start with that.
Sure.
Saying having a 24/7 platform that allows you to offer all services to your customer it gives you the freedom to go to the customers and say, yes, this is available with me, I can do this. My view personal is that banking or transaction banking as such is going to move from a banking service to a background service. So it is not the destination. It will be used as, I think Bassam was also highlighting, you would call embedded finance, as you said, or embedded banking or real-time integrated service. So that is what banks need to be ready with. We do get queries when new customers are being sourced for corporate. They do have requirements which come in that they would want to bank with you only if you could have the technical capabilities to be able to, for say, integrate with their ERP systems, payroll systems, HR systems. So once they onboard onto their systems, the employee accounts get created without the friction that is happening so that they become more productive. So this is what probably banks need to be ready with. There's some other things, because we've been going through this transformation for the last 3 years, so that's fresh with us. Some things have to be embedded into the designs, how you build platforms. So cybersecurity is one. Zero downtime architecture is another. So you need to build for that, you need to design for that, you need to think that way. It should not be an afterthought. Proactive monitoring, observability, not only for technical components, but also for business APIs, business processes, business KPIs, so that you're able to detect anomalies faster, you're able to preempt issues. So I think it was highlighted in one of the other ones, and I think you also highlighted. Customers would bank with you once they are confident that they will get the repeat, reliable, secure, and faster service every time. Corporate transactions are very high value, complex, and have a lot of stakes. So people wouldn't want to go into your transaction banking platform if they are not confident of what they are doing and how they are doing. So I think these are some things that are important. I think the future, if you're intelligent as a platform, and if you can automate, I think that would be the differentiator between different banks. So I think that is what one should strive to, that you build in those capabilities in terms of proactive monitoring, in terms of AI, ML, how do you route your payments, the fastest, cheapest route, how do you ensure that SLAs are missed, you can track the SLAs. So those are some things that are important for you to be able to satisfy today's corporate clients.
So just to take Himanshu's point forward with you, Rami, Himanshu was talking about how the entire customer-facing channels need to be aligned to the expectations of the corporates and business, because customers, like it was mentioned earlier, need that confidence to actually, log into the platform rather than depending on the RMs, so that they know that the transaction will be fulfilled without any friction. But we all know that it's just not, when we talk about the example of a kitchen versus restaurant, right? In a restaurant, you can have a very fancy restaurant, but if the kitchen is not able to service, obviously the customer experience is going to be not going to be that great. So while you're talking about channels, right, it's only what you have as the entire architecture that allows you to fulfill that particular requirement. The architecture is well designed. You have a better orchestration, better services, better, I would say a front to back automation in place, and a a good core or a good back office solutions. So in that context, how do you think that these core modernization, having this right core, is going to help this whole journey And how do you think that, most of the banks in Kuwait are going through this transformation, whether it is yourself, whether it is Boubyan, whether it is ABK, with Gulf Bank had just completed. So a lot of, Varba is under, so a lot of these banks are going through transformation. So where do you think these transformations are going to benefit, and how do you think these transformations have to be looked at in order for you to meet these requirements of corporates?
First of all, thank you for having me here. Core modernization is one of the key pillars, I think, if you want to build a tomorrow banking. And you have to be ready from three aspects, I think, mostly. To have open banking as one of the things. Having enterprise API ready. So because most of the fintechs, they come to the banks, they want to integrate. So you have to be ready for them. Open banking is one pillar, but even you as a bank, you have to have this one. And you have to support also the standards. For example, one of the standard ISO 222, which is let's call it like a Swift killer, honestly, because it's more like a structured data for all the payments in general. Because Swift having a text file, but the ISO 222 is like having more rich data. It will reduce the reconciliation, fraud detection, all this kind of stuff. So this is one of the modern things that you need to adapt the standard, because everyone, they have to have modernized core across all the solutions. And using AI is one of the key pillars also. So even you have to adapt for the AI and to be AI capable, because now everyone hear the term LLM, but let's be honest, LLM is just the same old concept. We just rename the product with the new changing name. So LLM is just like the machine learning large language model, what they call it. It's like ChatGPT, and imagine tomorrow you could attach any device to that LLM. Because currently if you use ChatGPT, you just try text with it, add document, that's it. But imagine for tomorrow, you plug a USB on that LLM, what will happen? Imagine attaching a core banking on that LLM. So this is the future, what you see the bank. You have to be ready for that.
So taking that forward, Subrato, obviously, whenever there is a need for a transformation, banks do tend to turn towards the fintechs and the banking technology providers to help them in the transformation. So as a product manager with one of the leading banking technology providers, in your view, how do you think that you play that role? How do you think that as technology providers, you kind of not only drive these discussions, but also kind of shape up the discussions with some of these banks, so that they are kind of a step ahead of competition? And how do you think that you use the latest technologies like AI, especially, in automating or in driving these transaction banking, and especially on the payment side, transformations?
Fantastic. Thanks for having me. And very deep discussions indeed since morning. And it is enlightening to hear all experts here. So two parts to it, right? The question. What we bring to the table as a product organization is kind of, the best practices done across the globe, right? For the markets that they have seen, that they has brought in those experiences within the product, that we share with our customers, and then they can take it forward in terms of their transformations. Because evolutions are happening globally, and that kind of global evolutions are brought into the product by us, and then we disseminate them across to various customers. So that's what we try to do it from our product management perspective. Second, in terms of AI part, right? So at least, not more than 30, 40 times we have uttered the word AI since morning. and it's real. Okay. So from the perspective of AI, if you look at it, there are two parts to it, right? AI, which we knew before 2022, which was more predictive AI, and AI, which we know after 2022, which is more generative AI. The transformation capabilities that AI brings in is a combination of both of these, right? The predictive AI plus the generative AI. Now let's take the case of, let's say, the payments or the transaction banking use cases itself. So let's say, for example, when you are onboarding a customer, right? Retail onboarding is, I would say, easier compared to a business or a corporate banking. Business banking is still a bit easier than the large corporate banking, right? So these are quite different paradigms. How do you use AI to check on frauds or check on fraudulent documents being submitted, or the deep fake cases that are coming up? How do you handle them? Then let's say in the payments processing arena, there are a lot of repetitive tasks that happen, right? Exception handling, routing you talked about, right? So how does AI come into the picture, right? So we are solving those use cases. So the use cases are varied across, be it trade finance to payments to, let's say we're talking about just-in-time liquidity, right? Mr. Bassam was talking about just-in-time liquidity. That's most important from an SME context perspective, right? Am I paid and when am I paid, right? He needs to know that. And how can AI come into bringing about efficiency and automation as well as risk management? So these are the two paradigms that are being talked about. Customer experience will naturally arrive, but using Gen AI and predictive AI for these two pillars, that is efficiency, automation, and risk management, are the key themes that are running forward.
So coming back to you, Bassam, I know you had given a very elaborate response earlier on the future of transaction banking or the expectations that clients have. But but banks can always integrate your transaction services with the treasury and lending and offer a full service, experience to clients. And there is also the way you integrate with the entire, journeys within that of the corporate, so that the entire banking experience is very seamless, not at the end point, but through the journey that even the corporates go through. So how do you think that banks can better do that, and where do you think that things are lagging, or how do you think that it can be taken forward in the future, so that the relationship is much broader when it comes to banks, and not that with corporates, and not that every corporates tend to you can't do away with multi-banking of corporates, but instead of going to each corporate with siloed products, you can package it.
So historically, I always go back, and you made me sound young, but I'm not that young. But historically, there were always two notions of banks: the transaction bank and your lending banks, right? And from a transaction banking perspective, we want it to be, we want to be the best transaction bank, because the lending bank should be only the cheapest, right? But now with the expectations evolving, corporates are looking for a bank, for a lending bank or a lending partner that's also, immediate to respond to his operations, can immediately draw down his facility, can look into those credit processes much faster. And like you said, it's not now product verticals anymore. It's journeys and customer experiences. So the verticals are slowly, this concept of corporate lending bank and transaction bank are kind of merging together with this whole journey approach. So first of all, some things are lagging behind, but it's work in progress. A couple of examples that we have done. So 2 years ago in Boubyan, if you want to issue an LC, you go to a separate trade portal, or a supply chain to a different portal, or if you're issuing payments to a third portal. So one of the basic stuff that we had to do is, have a one-stop shop for all your commercial needs. So initially we're gonna say we have one-stop shop for all your transaction banking needs, but soon enough we're gonna start saying we have a one-stop shop for all your banking needs. And also rightfully, corporates will not, restrict themselves to a single bank for risk purposes, credit facility purposes. But you want to be that bank to grab the biggest share of wallet. And once you fill those checks and those ticks across those products and solutions, you will be able to do that. So now we have a single sign-on for everything Boubyan. And then we say we have a single sign-on for all your bank accounts. So while open banking is not yet regulated, we do the old-fashioned third-party bank balances reporting via MT-940. 40. So we say Boubyan is your portal to your banking needs. We do that. This is at the basic level. We start drilling down more and more. So when you're offering supply chain finance to your clients or trade solutions to your client, you're able to see those invoices and you're letting your clients, discount them or factor them or whatever he wants to do with them immediately on the go. With obviously immediately on the go, we just put a small disclaimer with still a few papers that he needs to sign and upload and do that because of regulatory issues, so obviously. This is on the lending side. Yesterday I was attending the Dubai FinTech Summit. We saw a very nice solution that could be white labeled, is that an SME at this stage can upload financial statements, bank statements, give electronic approval for the credit bureau. All this data can be fetched. A credit report can be generated within 5 minutes at almost 99% accuracy, that what usually an RM would take 5 days to do. So imagine if we have this type of solution embedded part of the same portal that's offering you all the nice, glitzy, beautiful TB solutions and also access to your credit facility. All these things are happening as we speak. I mean, this is not, this is actual current scenario. Additionally, we're helping clients with their, so some fintechs or some TMS and ERPs, they make the bank agnostic, but not all the clients have access to them. So we offer some type of solutions that, we're not a full TMS, we're a bank, but I help you manage your liquidity as if I'm a TMS. So besides making your bank balances appear, we set up automated digital liquidity solution for you. We optimize your yields on your excess balances locally and internationally. And all this, again, in a single place with a single platform integrated immediately with you. Obviously, with those, there will be, the big wave that's coming is the APIs that's going to be going crazy, and I think we'll address it in the last phase. But all these things are making, the more the bank is able to blur the lines between the transaction bank and the corporate lending bank, the more it will be successful in developing these journeys across the board. And we're doing this work in progress. So there are some lags, of course, but this is work in progress. And it's coming quicker than we want to say.
Just take that forward, Bassam, just a quick thought on this as well. Now, while you talked about the integration between lending, per se, and transaction banking, but when it comes to business banking, there is a lot more on beyond banking as well, right? You don't say just banking, you're trying to provide value-added services beyond banking by creating an ecosystem, SME cockpit, which again, in most banks are driven by transaction banking because SMEs by default want their working capital to be met. Working capital needs to be met, and just-in-time liquidity, as you talked about, for SMEs. So what in your view is bank's role with these beyond banking services that you want to, that SMEs are looking forward to, and how banks can play a role in it?
Well, first of all, in terms of, if we're talking SMEs, we're looking at immediate facility to be given against their merchant acquiring business. That's nothing new here in it. It's just how you deploy this. And again, some of the services are becoming commoditized. It's the process of providing the services. It's the quickness of onboarding and deploying these capabilities that will make it the difference. So that's one. In terms of SMEs, we're also looking into this factoring and reverse factoring, where a full digital platform that we provide as well can enable their working capital immediately in a fully digitized solution. So a client can issue an invoice, his payee can accept it, he can request the bank to discount it, and immediately the drawdown is happening. Obviously, this is coming after currently a lengthy process of credit review. But once the credit limits are there, this whole seamless process is available. So that's one example. We're also availing, in the business banking, we're also availing kind of a marketplace where we allow clients interacting with each other, enabling payments faster, incentivizing them to, transact within. And that's some of the things that we're doing currently.
So, Himanshu, now that there are a lot of things that is happening on the corporate side when it comes to digitization, there are also scenarios where the push for digitization also comes from the tech side as well, right? Because as we said, today CIO has a table, a seat in the strategy table, right? So how do you see the role of technology, CIOs and technology, in pushing these digitization for transaction banking and getting IT ready in order to fulfill some of these requirements that Bassam was just alluding to at the moment?
See, a few years back, we used to say banks need to convert into technology companies to survive. So today, CIOs need to not be only technology heads. I think need to be business shapers. So today, corporate banking partnering decisions are not purely being based on the pricing, your traditional relationship with the customer, the limits that you give them. They are also being based on the technical maturity of an organization, how good and how technically an organization or a bank can support a corporate. We've been seeing cases where corporates agree to onboard with us after due diligence of our technical capabilities. So it has become more like an RFP process, wherein once they've agreed on the pricing and other, they also give us a requirement document saying subject to these technical requirements being met, we will decide to bank with you guys. It could be saying, can I see my liquidity position real time? Can I do my payment processing as a back-end process from my ERP systems without, so the need is coming that more and more host-to-host integrations, technical integration without actually doing banking as a background service is what is it. So CIOs now are not only managing infrastructure and technology, they are also being part of the customer acquisition process. We have cases where technology teams have to be part of that team that gives the value proposition to the corporate customer saying, business-wise, this is what we can offer, but technology-wise, this is what we'll offer. It could be not only a technology service, but it could be advisory services on technology. People are wanting to onboard onto Swift, for example. Now, people do not have, as corporates, this expertise there, so they need their bank, who are native users of this technology, to be able to help them to move around these services. So that is where now both the CIO and the technology teams, because their actions today have a direct impact on the client experience, the revenue, and also your acquisition. So they need to have a bigger say on that table, and they need to be part of that business, whether it's your product teams, your sales teams, your business teams, to be able to showcase the value proposition that as technology teams we bring in, so that the experience of the end customer becomes better, and they're more comfortable banking with you rather than, I think there was one conversation saying you don't get tied to an RM, you get tied to a bank because of the value provision that it brings in. So that is where I think CIOs have a bigger role to play now.
Now, just to take that forward, Rami, CIOs are facing increasing, demand to integrate tech stacks because of the way the entire integration is happening within the banks. Now, how do you think that banks in Kuwait can actually future-proof their transaction banking tech stack to ensure scalability, flexibility, but without compromising on security, and especially with a lot of these, happening, what of these day-to-day evolution that is happening around payments, in across the region and specifically in the market.
See, having a future-ready stack is something you have to work a longer plan. It's not something out of the box. You have it. The vendor or partners, they will help on that one. But modernizing that, it requires your core to be like more modular, composable, at the same time cloud-ready. So this three key things, I think, will uplift the banking into different levels. So in the future, the bank will have only two options: either to be a coreless, using bank as a service, or you be the host, like banking as a service. I think this is the direction most of the bank. We have to be ready. We have two paths, either to choose this one or this one. This is what I think from my point of view. So,
Sure. So, coming to you, Subrato. So, as a tech partner, right? How would you support the bank in this journey? Because you heard bankers saying that there is an increasing need from business, corporates, which business have to meet, for which IT has to support, and even IT has to be forward-looking as well. So, what do you think? I mean, how do you, as tech vendors, will be able to support the banks in this endeavor? And you also mentioned at the start of your discussion earlier that you bring those global perspective to the table. So obviously, based on your global perspective, there are certain trends that you would have seen around the transaction banking, around payments, around the way this whole integration is happening, and how SMEs are actually being catered to, right? So what is that? How do you support in the journey, and where do you think that you will be able to provide that advice which will help the banks, especially in Kuwait, to bridge that gap?
Thanks. So, see, when you say transaction banking as a segment, within that, I would qualify it into two parts: the small business and the large corporates, and they are quite different in terms of the needs. Right? Things that are evolving and disruptive or disrupting across geographies is the small business banking, right? And they are, as your first presentation as well today morning when Ram was giving a perspective on Kuwait and the GDP, the SMEs contribute 22%, if I recollect, to the overall GDP from that perspective. Banks in Kuwait need to support the SMEs, right? How do you support them? Is basically coming to Bassam's view as well. Allow them to do their business, right? Enable them to do their business. Integrate the bank into the value chain of the business, right? Right from his buying of inventory to selling his goods, the entire value chain should be supported by a framework which is provided by a bank. So bank is invisible behind him, supporting him in his entire business journey, right? That is one. And globally, if you see, currently there are three themes that are working in this segment. Okay? Number one is real-time payments. Okay? The amount of disruption that is causing in that, when I say disruption, it is obviously for the better, right? So the real-time payments, the way it is disrupting markets, like for example in India or elsewhere as well, or Brazil, for example, or faster payments in UK, the amount of benefit that it gets onto the SMEs, availability of cash, liquidity at that point of time, that is a game changer. Okay? So WMD has been introduced 2024. Technology is provided by KNet. Now it is for the banks to start looking at the value-added services on top of it, primarily targeting the SMEs or the large corporates, right?
how do you make it enabled? For example, I can just have an invoicing solution on my app, or my mobile app, or my internet banking, where I do my business, collect money from the, the customer. Can I do that use case, right? So these are things one can look at in real-time payments. Second is open banking, right? Open banking, when we read about open banking, this is my personal view, but essentially open banking with a capital O and a capital B is restrictive. When I say that, that's a noun that is driven by the regulation, which the central bank or the regulator brings in. What my take is, an open banking with a small o and a small b, which is a verb. Open your banking, right? So when you open that banking from that perspective, then it becomes, the ecosystem play comes into place, right?
So just one final question, 10 seconds from each of you. What is the most significant or impactful innovation that you see in 5 years where you put your money into? Bassam, 10 seconds.
Sorry, come again.
What is the single most significant innovation around transaction banking payments you see the next 5 years where you'll put your money into?
I would say single split in 3 parts. AI, real-time payments, embedded finance, and embedded contextual banking.
Yes, I think banking as a service. So retail, we have seen the disruption. Now there is no need for you to log into your banking app or to take out your card. I think that is where transaction banking also needs to go, where it is embedded into the process of the customer, the corporate.
AI, definitely. Second thing, I think pay now, pay later, because it's going crazy. Imagine like invest 100 million, you get like 40% of that number, 10% loss, 5% operation cost, you still have a 25, which is, if you go to real estate, 6 to 12%. Any other funds or investment is less than 20. So I think that's it.
My take is CBDC, primarily because of the programmability, not because of the transfer of money. You can build your contracts, transaction contracts inside that money. Do it for a purpose. That's my technology for the next 5 years in transaction banking space.
Thank you. And with that, I would like to conclude the panel 2. And thanks, gentlemen, for being part of the panel. Thank you.